morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the founder and executive chairman of Novicap, Federico Travella. Great to have you with us.
Good morning, Elliott. Happy to be here, and happy Friday.
Indeed, and for anyone who's watching when it's not a Friday, happy whatever day of the week it is to you too. But before we get cracking, let's learn a little bit more about Novicap. So, Federico, you're a SME lender, kind of like Krea or Iwaka. Is that kind of where we should pigeonhole you?
To be more specific, Novicap is a B2B working capital fintech providing the end-to-end working capital solution for SMEs, mid-market corporates, and public administrations. We go beyond the micro SME space, as we like to say. So our vision is really that CFOs of established SMEs and mid-market companies, they provide Novicap the keys to their business, and they let us manage their working capital in a holistic and automated way. This means that Novicap dynamically optimizes your existing working capital finance products that you have as an organization, but also we can provide the much needed working capital financing that a business needs. And this comes in the form of receivables financing. So think about factoring, supply chain financing, payables financing, and also working capital loans. And as such, we inject that much needed working capital. And naturally, this creates a positive impact for all the stakeholders around that company, as well as we also empower to make their payroll, to pay their VAT, and create more trade opportunities.
Okay, and can you give us some of your vital statistics, the kind of traction you have, growth, maybe revenues, profitability, if we're there yet, or when we'll be there?
We're headquartered in London with a focus on Spain at the moment. And in terms of traction, we've definitely achieved what I would like to say, call escape velocity. We've grown in a sustainable and a profitable way in the last few years. We're now at a stage what I would call growth, which opens up many exciting opportunities, both from an investment and an expansion perspective. Having that profitable base as a business, especially in this market, is a great starting point. We don't exclude fundraising going forward. As we all know, that also depends on the markets, but we're at a stage where we can look at it a little bit more opportunistically, given that profitable base. In terms of highlights, we financed close to 2 billion in working capital finance, so that is becoming a relevant number. And going forward, we believe we'll be having, that single-digit percentage of the market in which we operate, and hopefully grow from that point onwards.
We've seen in the current environment with high interest rates, a lot of big banks have been making big bucks thanks to the net interest margin that they can get. Is that something you and SME lenders can kind of benefit from as well? Or does your cost of capital also go up, so that kind of reduces the extra amount of money that you otherwise would have earned on loans?
We're not a deposit-taking institution. So from that perspective, as we've seen, the large incumbent banks, they haven't been passing on those rate hikes to consumers, companies holding deposits with them. And that is also why they've been making a profit in the last 12 months, right? In our case, we're not that deposit-taking institution. We raise money off balance sheet. So we have a number of institutions we work with. In our case, we've been successful at passing through some of those increases in the cost of capital or in cost of the financing that we have to pay to investors to our clients. So that's been successful in our case. But it's true that I would say that most of the alternative finance fintech lenders in this market, they struggle very often to pass through that rate. There's also a point at which, especially if you're not in that distressed lending space, there's a point at which also the utilization or the demand for credit drops because rates have gone up so much.
Okay, and I think you said you're focused on Spain. I think you're actually physically in Spain right now, in Barcelona. What are the plans for the future? Is it Spain, and then where to next? What are the plans for the future?
We want to be the European leader. That has always been our goal. I think there's a few ways for us to achieve that. That can be organic, expanding the business into other key continental European markets, but we don't exclude inorganic growth as well. And so I think in the coming years, as the market becomes ripe for consolidation, I think we're the right organization to take advantage of those consolidation, those M&A opportunities. This is also naturally driven by the fact that equity available to startups or scale-ups have become a lot scarcer, and this will lead to more consolidation opportunities. And I think we're one of the parties or the players that can also drive that consolidation rate.
Okay, so we've heard about Novicap. Let's learn more now about Federico. So, Federico, your path to founding Novicap, I think, wasn't a typical one. I think I read that you started out life fulfilling the ambition of Seinfeld's George Costanza and being a marine biologist. What was that all about? What did you do?
In fact, I was a marine geologist, so I'm
Close.
trained. You're close. So biologists, they deal with animals that are alive or the biosphere that is still alive. Geologists deal with dead animals and rocks. I indeed I trained as a marine geologist. Was mostly looking at that point for an international career, and naturally, as a geologist, you travel the world, you explore unknown places, and in search of whatever it is you're looking for. Now, I've always had a bit of an entrepreneurial streak in me, and I embarked on a bit of a pivot, so to speak, post-graduation. At that time, there was this relatively unknown venture builder called Rocket Internet, where I was lucky enough to become part of the early management team behind one of the companies they started called Lazada in Southeast Asia. And Lazada became one of the largest e-commerce businesses globally, and also the largest one in Southeast Asia, with eventually a successful exit to Alibaba. And that was very much my starting point to institutionalize the way I wanted to build companies. I had several other projects during university, during childhood, as an entrepreneur. But at Rocket, I really learned how to industrialize the approach of building companies. And at Lazada, what was interesting, first of all, is market-wise, we really saw how that e-commerce market leapfrogged to mobile first shopping. That was something which the West never had seen, because we obviously had all the legacy of more desktop based shopping. But so Southeast Asia really became a mobile first e-commerce market. But I also saw that when small businesses were trying to sell online and trade with a large e-commerce business, they were struggling with payment terms, with working capital, and especially when they face those long payment terms with clients. And that's how eventually I decided to build Novicap around that thesis of helping small medium businesses optimize and finance their working capital.
But in terms of being a marine geologist, was it good training? I mean, was it a sense of kind of you looking for things and then suddenly striking, not striking gold, but striking oil or striking whatever strata it is that you were looking for? Is it the analysis? Are there any things that one could say, yes, this really helped me from doing something completely different to what I'm doing now?
Generally speaking, I think having trained as a scientist helps in life. We have all that fake news, and first of all, also like now in climate tech, there's just so much innovation that very often makes very little sense. And I feel like having trained as a scientist helps to look through a lot of opportunities, investments, and you name it, in a lot more disciplined way. It helps you, I think, to understand the world in a better way as if you were have studied business. So in my case, I'm happy to have made that choice. In hindsight, I realized that I made the choice more for the sake of exploration rather than being very passionate about fossils or dead rocks. But I'm happy with the choice and the opportunities that came out of it.
Who isn't passionate about fossils and dead rocks? Anyway, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Novicap founder and executive chairman, Federico Travella. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Federico, let's talk about the future of finance. So, Federico, despite inflation coming way off its highs in the United States, in Europe, even in the UK, there are still some fears out there about a recession. You're obviously very close to, I suppose, a part of the economy that maybe is a canary, if you like, or a leading indicator of when a recession might be upon us. What's your assessment of what to expect?
I think there's some vast regional or geographical differences here at play. The US is lucky enough to always be able to live beyond its means. That's because they have the largest capital markets in the world. They have the reserve currency of today's world still, and that allows them to operate their country and economic policy in many different ways. As we've seen in growth rates, US seems to be getting away with still positive growth and many opportunities surrounding that. If we zoom in a little bit more in Europe, I'm afraid that we need to be a little bit more bearish when it comes to the economic sentiment today. We're seeing this in our activity. Naturally, as Novicap, we're very well plugged into the wider economy. We're also agnostic in terms of industry, so we see many industries that are slowing down in terms of growth. Businesses are very leveraged. Debt levels have never been as high. Also on the personal side, people have been taking up debt as well. Now that those pandemic reserves have been consumed, and then governments in Europe are very indebted as well. So I think it is a recipe which makes it very difficult for high and sustained growth rates in the coming years. That doesn't mean there's no opportunities out there. It just means that we'll be working in a world where, the growth rates and expansion opportunities are very different from those that we've been used of in the last bull market.
What kind of impact would you expect to see on fintechs and perhaps lenders in particular? Because one of the first things that happens if a recession does come about is that businesses and consumers, and I know that you're focused on businesses, maybe can't pay their loans back, and then we get bad loans, and then we have issues with lenders. Are fintechs kind of well positioned to be somewhat insulated against any potential fallout or any kind of recession?
There's pretty much two scenarios when it comes to specifically fintech lenders. One is if they manage to cherry pick amongst the risk that banks are rejecting, because typically during more recessionary times, the banks would also take a more protective position, and as such, they close the tap of financing towards consumers, towards businesses. And that may generate a larger market opportunity for fintechs to take advantage of. Now, in that scenario, you have to be very, very careful about the risks you take up, because you may get an adverse selection of risk because a bank has rejected those businesses for financing. In our case, what we've been successfully doing is originate a lot of our business through partners, trusted partners, which we believe provide a positive selection of risk. That doesn't mean we're not disciplined on the risk side, and in fact, we've been very, very careful in this market to protect or the performance of our cohorts. But I would expect also that a lot of the lenders out there, the non-bank lenders, which eventually are part of the shadow banking market, taking up some of the business that banks aren't taking up, would see their NPLs, their loss rates increase. Specifically on fintech lending and businesses that I would say that are venture capital backed, or they need to raise venture capital to start or to operate their business, that is currently a very difficult market. And the reason is that equity has become a lot more scarce and also more expensive. And as such, if you're a relatively new player in this market and you need to provide the solvency required to operate a fintech lending business, but also very often the first loss capital that you have to put up when you raise senior financing in a debt facility, for instance, it becomes very difficult to start a new fintech lending business today. And I think that is a market where we'll see less new entrants and more consolidation.
Okay, changing tack slightly, Federico. If you look into your crystal ball in 10, 20 years, how is the kind of artificial intelligence advances that we're seeing today going to impact the way that finance is working? A business is going to just automatically receive loans into their account when they need them, and it'll pay back automatically. And your businesses like yours will automatically select people for loans and the like without having to do anything at all, because it will all happen automatically. What's your vision of where things are going to go thanks to artificial intelligence?
We've already been using AI in both the business world and in as individuals, consumers. AI is nothing new from that perspective. If people scroll TikTok, AI is in full force. The same in many business solutions today. There's already AI baked into the solution. So I think if AI is rolled out in financial tools, in financial solutions, it's going to be the most rapid way to market is when that technology is kept in the background, because it's when it's really visible that people also very often mistrust it. And specifically when it comes to financial services, as we both know, Elliott, it's about trust. And so what data is being used, how is it being used, is incredibly important for CFOs, for businesses, and that is going to be an important factor in the speed at which you roll out new technology. Specifically in this SME space, just to share one anecdote, it is not the most advanced when it comes to technology typically. I still remember when we were starting to onboard the first customers in 2015-16, and we had a very novel digital invoice finance factoring solution in the Spanish market, and the businesses were excited about that. Now, the level of tech savviness was relatively low, and it's still relatively low amongst SMEs today. But to the extent that in 2015, when clients wanted to, for instance, simulate what it would cost them real time, what it would cost them to finance a receivable, an invoice, they were asking us for the price in pesetas. And pesetas had been phased out, and we obviously were euro was in full force since long. But that is really the level of tech savviness very often that you find at SMEs, and that may be also why some of the technology is better rolled out in the background, as long as the data, of course, is organized appropriately. But there's going to be very often slower go-to-market scenarios than what entrepreneurs would like to expect in certain segments of the market.
Okay, so we're going to move on now to our round of rapid-fire questions. Are you ready?
I'm ready.
Great. So look, I'm going to put 90 seconds on my timer here, and when we get to the end of this, for some reason, it's not okay. When we get to the end of this, we will finish when the buzzer goes off. So without further ado, one-word answers is all I'm looking for. I'm going to start the clock and we'll kick things off. So what fintech segment has the biggest potential over the next 5 years?
Payments.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Treasury management.
Do you think we're at the beginning, middle, or end of the fintech wave?
It's still day one.
Do you think EU or US regulators have kept pace with all the new possibilities and behaviors in the financial industry?
Certainly not.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, part of the future of finance that we really don't want to miss out on?
B.
Have you personally ever invested in crypto?
I have.
Are physical points of sales part of the future of finance?
They are.
On a scale of 1 to 10, 10 is the most likely, 1 the least likely. What do you rate the chances of the following happening in the next 10 years? One of the neobanks will be as profitable as a top-tier legacy bank.
I think that is definitely plausible.
So how likely
9.
between 0 and 9? Okay. That central bank digital currencies become a mainstream reality in the US or EU?
6.
That you'll be able to open a crypto account at a top-tier bank?
10.
Oh, 10. Wow. Okay. Well, we'll see when that happens. I guess right now, perhaps not flavor of the month crypto, but we'll see what happens. But I'm afraid we're actually out of time for our round of rapid fire questions and for our conversation. So I really just want to thank you, Federico Travella, founder and executive chairman of Novicap, for joining me today. Thank you so much.
Thanks for having me, Elliott. Have a great day.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum, of course, X as it's now called. See you next time. Bye for now.